Welcome to the Breakfast Club. My name is Darren Hancock, and here we are on December the 5th, 2024, Thursday. Cheers to y'all, and welcome to the show. Don't forget, it's non-farm payroll this week, and we've got markets kind of going sideways, bouncing up and down on a Thursday, Friday. And then we'll see. Hopefully I see it smooth out a little bit tomorrow. Today or tomorrow should make a high or of the week, I'm thinking. We get a continuation. We've got a deeper run into next week that we should start seeing reverse. That's all just speculation right now, but let me we still haven't quite hit yesterday's leg projection. Looks like we're heading there now. If you look at inside this little range at 830 here, we had a spike down, cleaned out these lows. We ran back up to the premium inside this range. Then we came down to the discount inside this range right here. And now we're back up into the premium again. I'd like to see these blocks hold price and start rocketing higher. I'd like to see it get higher and start filling yesterday's objective here. Ooh, get them out. Don't need a hoodie in the house today. So I like to see that start going higher now. Reclaim this breaker. I guess not. Got to get through this premium array here and go a little higher. For it to go higher, it's got to get through here. I guess you have to take it all the way down to there. All right, so let me just give you a quick run through. As I typically do in the morning, I'll give you a run through on all the assets I'm looking at. So I'm looking for, again, that price leg to finish off from yesterday. We went sideways after near the end of the day, and then we're looking for a run back up, clear these this old high out here, and then perhaps see a reversal. I'll be looking for a reversal after that. After the fact, yes. I guess we're still looking for this to go higher. It's consolidating, but we are still getting returns to see if we get this open on the 5 o'clock candle. See if that holds, and we'll continue pushing higher. This could reverse in here now. It's a Thursday, typical Thursday reversal. What we got going on, or potentially going on this morning if we get below this candle here, this 5 o'clock candle, and come back into this. I like to see that just give us a nice downward run for today. We have relative equal highs above us, so if we just pop up, clean out these highs, and start to move back down, I'm still looking for this level right here. And we're close to clearing out the recent highs. We finally came down to our downside objective yesterday we were looking for in gas, and we've had a bit of reaction off that. Or is that this morning? No, that's yesterday. So we were looking for it to come back into that level. It hit it, and now we're looking for it to climb back out of here. There's lots of gaps above you. So, and we've see how we've already pre-market, we're going higher. So you look for a run back up into 50% of this range now. Copper's done a turn on us, come back inside it, and we're looking for lower prices in copper. TSX is looking good. Happy for my mom and dad on that. Way to go. So we didn't quite hit mitigation block, but we did come back to this old high here. Now we want to see it get through this SIBI here on a close today. Gold, flat, flat. Wheat, hit our objective. And then we're looking for wheat to run higher. And we're in the upper portion of that box, like that. So if we return back up into this level and see how we react off that. It's good. Soybeans are going to make a run for these lows. So far, this box is really holding price. We didn't quite get this thing, but we did get the order block down here, this swing that takes out these highs. So we returned to the breaker and then went lower. We've traded through this level and we've hit that weekly again. So I'm looking for this weekly sugar to go lower now. See if we can get this a continuation, take out that low. See what kind of reaction we get inside the weekly. Whether we eat through it, come back, find support at the consequent encroachment and continue coming lower. Let's have a look at that on a daily. Oh yeah, okay, that would make sense. Come lower. There you go. So we're looking for lower prices. The drawn liquidity is on the daily. So looking for this 1959 down here. Coffee finally gave us the run through. Yesterday, we came down, tapped the old high, continue pushing higher. We're back into this level again now. I like to see coffee come lower. Just hit off of here and roll over, but now that we've traded above it, you're back inside this level here now. Let's see if that it's not really an inversion now. Still, I'm going to call it fair value. Doesn't really matter what you call it. That's the area I'm looking for. What you call it and how you interpret it are two different things. We're back off that little yellow box again, which is an inversion level, I think. Yes. So that inversion level, we're still hitting it. Looks like we're just staying underneath the price action, just enough to clear it out. There was no drive down here to clear up the liquidity. I'd like to have seen that actually run back down to a discount array, getting down into 184, 185. We've taken up all that, so you think that this would be poised to go higher. If it does come running down, if you lose 185,775, look for a further run down into that range. Finally got cocoa up into the level we're looking for. Beautiful. Froze up on there yesterday. So if we do get a revisit of the consequent encroachment, or just short of the consequent encroachment today on a close or a wick, and then see that run higher. If we eat through this mean threshold of this candle on the cocoa, then we're looking for a run lower now that we've taken out these old highs here. And lumber. Yeah, it feels heavy now. I'd like to have seen that continue pushing higher inside here. And the fact that we just came back up and retapped this old low just tells me you want to come back and fill that in now. Lean piggies, we're back inside the range again. We're not doing anything till we get out of here. Outside this box, I mean, like find some good support on top of it or below it. So nothing for you in piggies. This could be it for crude oil. You could see a reversal off of here. Yeah. You may not get that high. I'd like to see if a body closes through here. I'd like to see that continue pushing higher, get back up into that range. I want to see a body close above this candle on the hourly, or that would be the daily, I guess. You can still see that going higher. Look at the 15-minute chart here. If we close above here in 15 minutes, come back inside this whole level, back to here, I'd like to see it come back all the way down to here. And then look for higher prices. Look for a retracement in oil today, and then see if we get a push up higher. Let's see it just close there in 15 minutes and then come back for the next half hour or so. Back down into this level here inside this breaker. 7 more minutes to see what we've got there. We'll see how that sets up. If it doesn't, then we'll look for a deeper retracement. It could pull us all the way back down into this level down here. And I wouldn't want to see that get taken out. All depends if we take this high. There's a few things that need to come into play here for that to continue. Gold. What do we got for gold? We have a nice reversal here on the 1 minute chart for gold. Traded above it, come back perfectly, enter in there for long. Pay yourself here. That's traded above it. I'd like to see this start taking out these highs, and you're aiming back for that new week opening gap on that first presentation. And what do we got here? It's got to get above this level, and then you're looking for first presentation. You don't want to see it get below. I want to see a constant encroachment of this get hit. No more than that. I'll leave a portion of that open. Ideally, you want to see it just start leaving here right now. Just start heading north. That's what I want to see. And Bitcoin. Bitcoin ran through our 1 hour fair value gap that we're looking for. We ran through that, came back, found support at it, and that's another classic example of the algorithm doing what it does. You'll love that. Good morning, Dale. Adi, good morning, Craig. Don't hear anything if you're talking. What? Don't tell me I'm not talking. Yeah, I got my mic on. I'm good. It's probably your end. Probably your end, my friend. I can hear me talking. I'm long on this right now. I'm just covering my position on NQ. Can you guys hear me? Your sound is good, bro. Excellent. Thanks, Derek. JDM, good morning. Okay, you guys can all hear me good. Morning, ThetaWave Surfer. Thanks for that little presentation yesterday, Derek. Appreciate it. Thank you for taking your time out to do that. It's always nice to see somebody giving something back to the community. It's always nice. Where are we going now? Where are we at? Okay, Bitcoin. Where are we going in Bitcoin, you say? Where are we going in Bitcoin? Let me get all my stuff out of here so we ain't confusing nobody. Nothing but higher so far. I've got nothing nothing to say negative about Bitcoin right now. It looks like it's still going higher. Yep. Keep your eye on this level for the hourly. Oops. See if that provides some support. If not, you're looking for a deeper run, 50%-ish of that range. If you lose that on the downside, we just rolled up into order block and we did not go through. So on your Swissy, you want to see this whole price all the way to consequent encroachment, or just ideally just before it. Like, don't actually touch it, just land before it, and then start running back up. And you want to see the mean threshold, that candle give way. If it doesn't, and we end up losing, it starts to lose its luster for me to go higher as we start to eat through this candle's body. If we get through that consequent encroachment, I start to get a little concerned. And like we showed you back in I think it was lumber, we only want to see 25% of that fill as the last ditch effort for hope to continue going higher. So we'll see how that goes in Swissy. And Vita continue to climb through that, which is great. I was looking for it to come a little lower. Hit that. Want to see if we can get a reaction out of here. You did. You traded through it. You opened above it today. Traded back into it beautifully here. And then we started going higher. So I'm looking for Nvidia to go 146 to 145, 146. Well, we've hit the 145 already. Now I'm kind of neutral. If we can get through this on the upside, you're looking for further upside. If not, this could be rolling over, coming back down into this range again at 139. Yeah, you've already hit the premium portion of that. So I can give you both directions. So I'm flat on neutral on Nvidia. Boeing came back through that candle once again. And we've got a pre-market that takes us above 159. If we can get above this and hold support and look for that to run higher, I guess you'd have to take from there to there, from here to here, because it's wicks and it's a gap, include them all, and you're going to get above 959, and that's opening right on it. So you want to see that continue going higher. Interesting. Okay. We saw a nice little run up there yesterday in silver. It got us through this level. Looking for this upside box right here. Now you find support. I like to see silver start pushing a little higher. Mosaic, not what we wanted to see. Institutional order flow entry drill, you did not get to retap that low. Just shy of it. We're right back down to this order block here. 50%. See, we didn't want it to get down there, but that's where we anticipated it might go. So, Craig, if you're in this, look for this breaker. You want this breaker to hold price now. Otherwise, if you're going long on this, you're looking for another big run down into this discount area of 25.62 before running that high. You're into the discount range already, and you're back to this order block, which is what we wanted to see. This imbalance, you want to see it stay open, and I want to see that go higher. That imbalance starts to fill. Look for a run back into this breaker right here. And then it starts to lose its luster for me the deeper it gets into that breaker. If you start getting through that mean threshold of the breaker, then we're looking for that run back into this discount array. Way down in here, 70, well, 70, 75 would put us right on the optimum trade entry reversal. I'm going to watch NVIDIA or Mosaic for the next couple of days. I want to see how that one actually pans out. AMD. We have an upside objective right here, and AMD's looking fine. We called this long yesterday, so advanced microservices, so that's good. I'm going to see that continue to run up into here today. And with that, we are back on the bus. All right. I've been practicing using your CAM models, and it's changed how I look at the market. Still trying to dial it in, though. Good for you, Del. Yeah, those consolidations, those CAM models, and if you trade CAM to CAM, that little space in between the CAM models, and you're a CAM model trader consistently, and you study all the CAM setups, you'll start tweaking it down to your own liking, right? So yeah, good for you, man. Well done. Derek, you sound so good, bro. I can hear you. Okay, good. Greg, D, can you share that talk from Derek for those not on Telegram? Can I share the talk? I didn't record it, but I know somebody else did, and you'll have to check with Derek on if that's okay to release that for him. I don't control Derek. He's an uncontrollable child. I have no control over that man, as his wife might say. You can just check with Derek, and if he can get the recording, he'll be happy to give it to you, I'm sure. God, I sound like I got Derek the sock pocket. But so what do you say, Derek? Would you like to give that? Sure, I would. No, sure, I would. That's how Derek sounds. Craig, Derek, my pleasure. I did look at my notes and missed a few things, so we may need to refresh when it suits folks. Or Car, show me how to record so I can record it now and post it. Lovely. Yeah, I can record it for you, Derek, if you choose, and I can post it on your channel. I know if you want to do it yourself, I totally respect that. But if you don't want to download OS, what do they call it, OSE, and figure it out, then you want to do that, go for it. Morning, Ollie. Big bounce. Mine makes me think probabilities are for a retracement here in the daily at some point. Yes. Channeling the inner Canadian in me, looking for a turtle seated entry this morning. Purged the 489. Yeah, I'm looking for that to take out the highs at 10 o'clock. Good morning, Zach. In Moss's long-term swing, it's a value play. Good stuff. All a day before an FP, so it can often be a washout. See profit, take profit. Agreed. I missed it as well. I'd like to review it prior to its release. Yeah. Go right ahead. It's probably better if it was captured raw and unedited. Yeah, it's probably better if you just do it yourself. I need all the good training I can get. You got more training than the rest of us, Craig. You get your master's degree in economics, is it? You can dance circles around us. But it certainly is good having you in the group, that's for sure. So I want to get above here and then start digging into this level one more time. Small cam model here on the 15-second chart. Not really. I still consider this all consolidation here. It does not help me draw lines. First question asked was, is it live or is it Memorex? Memorex. Man, that's an old commercial, hey? I wonder how many people out there know that commercial. Is it live or is it Memorex? Oh, it could come a little lower. Derek's pretty old. Also, I remember that. You guys got to be over 50 to remember live or Memorex. Back in the tape days, hey? I remember my first pickup truck I got, it came with an 8-track player, and I had Meatloaf's Bat Out of Hell. Teenager with a pickup truck and an 8-track with Bat Out of Hell playing. Man, that's all a guy needs. That's all a guy needs. Just crank that up in my truck and drive around. you put a cement block in the back of the truck. Stupid as hell, but you know, weigh it down so that you don't fishtail in wintertime. Oh, you throw all these sandbags and stuff in the back. You know, those perfect things that can kill you in a rollover. They come hurtling through the door or through the back window. I have a question about cam models. When there are two overlapping consolidations, what do you look for? Wait for it to bust through one of the consolidations on one side or the other. Don't even try to chase. Like if they're that close together, wait for it to bust through the high side or the low side, and use the bottom one or the top one as your continuation model. And if they're literally overlapping and stuck together, use that one both together as one giant consolidation. I'm sure you could probably find a tighter setup in there, but that's what I would do. I would wait for, I'd combine the two of them into one solid one, and then I would wait for it to break up above one or the other. It's a good thing I can't find my spectacles, or that young fella at Craigslist would be in for. So you see how we've gone from inside this range here. When you trade below this level, you want to see it come back inside this level and hold price, or at least inside this candle. It took this high. You want to see this hold price, and it didn't. See how it went through it and then came back up into the premium array up here. And now you want to see if it gets below the discount array. It did here, pop back up. Now you want to see it just hit it and come through it. This is the problem with consolidations. It's not acting the way we want it to act. Then it's just coming back into this range. So then you're looking for another little run back up into this area here. If you're inside, see how it just had a body below, then ran all the way through it again on the upside. So then you're back inside this smaller range here, a little fair value gap here, and a little gap right there. So if it taps that and comes down to here again, you want to see it drive through. I'm just inside this one here and that one, or mean threshold to mean threshold. This getting smaller, it's compressing, and eventually it's got to pop out of here somewhere. Good morning, Russell. Not impressed with the look of these 15-minute candles. No, they're not giving you much either. Look at that. You could shred up a lot of cheese in that. That's a big ass grater on that 15-minute. You want to see this, it's got to get through this, or if we come back into the mean threshold of this candle, see how we're hitting the mean threshold? We want to see that give way and start coming back down deeper, and there's nothing down here of any major consequence, so it's all been worked. So if this does degrade here, Derek, you want to see this on a tear. A lot of speed getting through here. Once this finally takes out these relative equal highs, you want to see it on a tear through here. So we want to see a nice big power down candle day today. But the peak being made today, I'd like to see a reversal right up in our little area that we were looking at yesterday. See if it actually hits that. Need some petrol. Needs a little bit of petrol. It does, yes, indeed. A little motivation. A little motivation. Still looks like it can. Gotta get above here though. There's the premium array again inside that range. Hit it perfectly. Now run. There you go. Run through it. Now you want to see it get some legs here. And start moving up. You want to get through this level here. There we go. Run her up now. Five, 3, 2. Yeah, that fair value gap. It's not new. Are you talking about this one here, Hadi? That's not an inversion. That's just a reclaimed fair value gap. That's all that is. Into this candle. Little imbalance down here. See how the body came right into it? It was a small one down here again too. We traded through this one. We took out these highs, created a reversal, came back inside it. Inside this order block, you traded below the low of it. Now you want to see this keep coming lower. I don't want to see it coming back up there. So this is when you want it to act a specific way. You want to see it come down here with a sense of urgency now, but because you got all this consolidation here, it's just running back and forth in these small little ranges. So you're back to this level here again. Now accelerate all through this, or we're going to leave that till after 10 or 9:30. I don't know. Still want this to come lower. I wanted to see it get through close on that candle there. Then we're looking for these lows. I mean, for value, right? Exactly. If that's what you're looking at. Remember, escape at the rejection block for conservatives, not liberals. See this keep coming lower now. Tiny gap, major consolidation, no hurry to get anywhere. Could end up being an inside day. May keep the gunpowder in the pouch today unless I see some decent displacement. Agreed, Ollie. I like the way you're thinking, man. I like the way you're thinking. Time to begin the comedian show. It's fun to kind of stay on the horse though, and this kind of, you don't want to trade this. Take all the stress away from having to make a trade today and just study where you want to see this price go from where to where. And you'll really have to start cutting through candles to see your ranges and say, where do you want to see price return to? Little tiny box right here. I don't know why I've got that song going through my head. Because of you, I never strayed too far from the sidewalk. I don't know why it's in my head. I don't even know if I even heard that in the last few days. I probably did. But it's nice to know my brain will sing to me every once in a while. Okay, so discount array, premium array. Where's your preview? Before I draw it in, where are you guys putting your premium array? If you're studying this right now, where is the premium array for you? Oh, it's just hit it, so forget it. Right there. So now you want to see if it comes out. Oh, there you go. Cleaned out the lows. All those people who wanted to go long, rush them out. Now you want to see a displacement. See us get through here. Mean threshold. It gets validated above. Look for that candle for support. Eat through the mean threshold of this candle. That's been visited already. That one's been visited already. They're overlapping practically on one another. So you want to see this one give way. Find support at that. Start pushing higher. 21,534, says Derek. There's a small gap up there. Got to get a body above here though, not just a wick. If we just wick run, stop, just running the little stops out the loop below and above, and then you come back into that range again, then it'll nestle itself in between these two. I want to see if we revisit this down here now. That mean threshold, it got drilled into once, drilled into again. Does it hold price? And our bodies, yes. Our bodies respect this gap. Wick. Finally take out the highs again. There's your 534, Derek. Good call. Right up to that little gap. You said there was a gap up here somewhere? Indeed it was. This will go to right there. Now we get some support inside here. You'll see that keep climbing higher. Got 2 more minutes. . If we can't get that up a little higher, I still want to see this thing finish off. Not that it's an absolute level, but if Michael was calling for 580 sometime this week, then 580 is on the agenda. One more minute. What do we got? Let's see this launch. I'd love to see this just go. Judas, see your Judas swing here. Take out those lows once more. Pull people into thinking we're going to go lower. Forget all these guys here right now. And go higher. There you go. Well, we've successfully cleared out both sides of the market there now. Let's see that run back up one more time. There's your new hour right to the money there. We still got relative equal highs, even though we did take out yesterday's high. That opening move is nasty, yeah. But I look for the first little displacement. Does it go up or down? First displacement was up. This is all Judas. Michael mentioned that before, and he doesn't put a lot of weight on it because he hasn't had a lot of discussions about it. But any type of non-farm payroll event, look for the first displacement and then the Judas, and then it's like, I'm heading this way. Give everybody a false idea that we're going lower, and then reverse. You got this little reversal here. You haven't taken out any lows, and there's nothing down here that would support lower prices. So for me, as soon as we get through this level here, I'd like to see that keep running higher. Let's There we go. I'm long on that, so I'm gonna move my stop loss into profit. Since being above this here, I got in short or long there. And I'm moving into profit already. Okay, came back and took me there. Took the highs out. Let's see if we get support inside here. Let's move this one. Keep going higher. It's a little too premium for me right now. Yeah, don't worry about trading it, Derek or Craig. You'll get to the point where you'll see it faster, but otherwise, just watch how it acts. If you need to go back to a 1 minute chart and slow it down, like 1 minute's really slow. If you need to slow it down, look for the arrays. Say, I need to see this mean threshold of this candle and that candle. They're the lowest down close candle and up close candle in a range. There's nothing else in here. So you want to see the high, the open, and the mean threshold. So let's just see if this holds right here. And it's on a 20, it's on 38. So I'd like to see that hold for a swing. And then obviously on a lower time frame, we want to see this. I think that was over here, wasn't it? Where's the 1 minute one? So that mean threshold holds. So now you want to see if this mean threshold holds. You're kind of stuck between those two, and they're literally overlapping one another. So you're in a small consolidation on a 1 minute chart. So if this gives way, you expect to see it come down a little lower to consequent or the rejection block and potentially gun for this fair value gap below you here. So watch, see how that acts. It doesn't create a low, so you're looking for lower prices now. Just time in a bottle tells me that wants to go lower, just because that didn't create a swing point. So 40.42 wants to go lower. Here's 39, so 40 reverses after hitting rejection block. If 40 reverses, creates a little low here, and 40 starts running back up, you're looking for this highest candle or the body to body here and the 50% of that to get taken. Wow, on a 15-second chart, that sure is a lot of sugar. How do you like that little buzzsaw? Don't want to participate in that. So creates a little low. There's a small little imbalance right there. Come back, hit it, little run through it. And now you want to see it run higher here. That's created that low. Go back to the 1 minute. Here's your 40 candle, creating a swing point. And now you want to see it come down and make a new swing point below as well. There's a little imbalance right here. That's good. If you only got 1 minute as your fastest, stick with that right now, Craig. Look at the range you're in here now and tell me where the discount array is. Got my green trade for the day in crude oil. We'll learn from D and wait for the setup on the larger time frame. Oh yeah, I was looking for oil for a reversal. I can't remember what did I say I was looking for in oil? Was I looking for a run lower or a run higher? It must have been a run higher. Or was it here? 7:30. I'm sorry, I can't even remember what the hell. It's the joy of getting older. I can't remember what I was saying about this. So I'm going from 8:30. So if I was awake here, get down here at 7. $8:30. So I was looking for a reversal up here. Trade back into here. Reverse. Eesh. You want to see that whole price now if that's going to go higher. That's kind of crap right now. I can't remember what I was saying. I don't want to just form fit something and take it for the sake of saying, yeah, I was right or wrong. I can't remember. Right now it's flat. Got no trade there. So 40, 42 we're in now. 42 is already making a swing lower. Now 45. Need threshold. It's already been taken. 522 hit. 505, 508 next. 522. 518. 522. Where's 522? So if you're looking at inside this range here, you want to go discount range. So if you want, just first way to start looking is to take the large range that you're in, like that. Go to your templates, go to retracement, and you want to say what is below 50%. you look for your first discount array below 50%, and you got this big order block here that as soon as you run above it, you want to come back and retrace into it. If you trade through it on the downside, then you're looking for the next one down, which is here, this guy here, here, and then the lowest one, you put your little magic box over here. So from that candle's high to that candle's open, you have to include this imbalance here, this volume imbalance. So if you run back up to the premium array again, and there isn't one inside this range here, so that's the 1 minute. If you end up starting to run back up through the mean threshold of this candle, then you're looking for higher prices yet again. You've already dipped into the discount portion of that range one more time, into this box here. If this holds, you want to see it revisit this and start coming down deeper into the range here. If you're just playing silly buggers and just running around inside here. If we've got intentions of going higher, you want to see that this 70% optimum trade entry to hold and start really climbing high. So watch through here now. And 508, you said, hey, 508. No, 508, you want to look for this guy right here. 514 to 513, Kevin. Inside that larger range there. The bottom one. If you want to see the range extend, it's got to get through this guy here. Oh, on a 15-second chart. You got to tell me your time frames, you guys. If you're on a different time frame, you're going to have a different setup for sure. Oh, if you're inside that range, then your bottom one is 526, 524. There's an imbalance right here. Inside that range, you have to get through that, which is also the mean threshold of that candle. 508. If you're in a 15-second chart, you're inside this range. The question I was giving you guys was on a 1 minute chart. Where is it in here? Remember, it's important you guys stay on the same time frame that I'm talking about, or if you want me to answer a question, make sure you give me the time frame that you're on. Otherwise, I won't give you the right answer, or close to the right answer. We're above the 1 minute one now. Do we find support at this level? This candle's open and start to move away. And then watch that mean threshold again. Okay, I get what you're saying. Okay. If you're ever not sure, Kevin, just let me know, buddy. I'm happy to help. Sometimes I don't make my question very clear, so my apologies. It's probably my fault for not making that clear. Mean threshold. Yeah, see, it's given away already. You want to see, I wanted to see it come down, tap that. Ideally, you want to see it tap it and go, or the open and go. So it tapped it right there, tapped it. You saw it waffling there for a bit, then drove through the mean threshold. Now we're on the other side of this. So you want to see this come back into this range. And if it runs through it again, you wait for the high or the low to get taken. Watch for these lows, and again back into this larger range here again. We lose the mean threshold on that candle. Watch this little imbalance down here and that mean threshold. Yeah, right there. Look at that. Little tiny. I was like, where is it, Derek? I don't even see it. It's right there. It's just hidden right inside that little tiny place. Way to go. It took till 9:47. Watch here. There you go. Ran right through it. Lovely. Now you're looking for this downside. You see how we knew we wanted to see that level and it starts to give way and you, now we're going lower. And sure enough, it created that little fair value gap finally. And lower we went. And now we're through this level at 511. And now you want to see this extend deeper now. See where the body ends up. Wick does some damage. We'll see where the body ends up. See if it ends up above here. If it starts to really accelerate and move through here. On a 15-minute chart, what have we got? Man, I got nothing on a 15-minute chart either. Let me make this bigger. See if I can find something in here. Well, okay. We'll see if 504 holds. See if 504 holds. Now I want to see this accelerate down again. Come back into this order block here. Just give it a kiss. And you want to see that go lower now. They're opening up their spread. Oh. It's like they're my broker's giving me a little must be opening up the spread more on me because it came back and took me out. Took my I moved into profit right away, and then I thought, okay, that might give me a little bit of, and all of a sudden it went bloop, it's out. It was like 20 bucks. Okay, that makes sense now. We got wicks creating equal lows. I'd like to see this order block get hit one more time. If we get a trade back up just above here, consequent encroachment of this SIBI here is all you'd want to see, but I want to see just come back and hit the bottom of this. And then you want to see it go lower. At 449. That's mine right there. 447. AMP didn't identify that as a first. Oh, okay, I see. Yeah, you got to go with whatever your guy. Whatever they present to you, I suppose. They want to see it get down 508, we said. That's good. Eat right through that. Oh, see, we want to see this accelerate like we're talking about. We want to see that really start to shoot through here now. And take out these equal lows here on the hourly. The line in the sand for me on the hourly is 500. If you want to blast right through that, look for a run for these lows. You see on the 15-minute chart, there's nothing in here that would warrant us coming down to give it a nice little touch. That's all you want to see it explode through here. That's why we were talking about this, saying you want to see it accelerate through here. That's what I'm looking for, is some quick acceleration there. Push fast, let's go. Derek, I hope you're still in this, man. Hit this low. We've got a little imbalance. I'd like to see that stay open and this keep coming lower. But if it comes back to fill, I still want to see a portion of that stay open. There you go. We'll turn into this order block here. See if that holds price. Eating through this now. It loses its luster for long or for short. Now when I go, I'm looking for these candles here. Got a small reversal here on a 1 minute chart. And this could still turn around inside here. I want to see a body get above here first to start thinking about coming higher. Mark out your levels. Now do we just continue coming through? Still no return into here yet. So watch this one here now. We come back into that level. And you want to see this accelerate through here now. Right to this on the 15-minute chart, right back to that last candle's most sensitive, right off the top of that open. Reverse, you don't get the reverse, you don't get that one. Look for this. Dives into it. Now I want to see that accelerate higher. This one is inside this one. Stop loss will be sitting way back down here. You're good. Glad I found your channel. Well, I'm glad you're here, TYT Nation. ICT just said if he were the market maker, he would sink it to 21,490. On a 15-second chart, we've got a reverse. Watch below here. You're right back to that 931 15-second fair value gap. Watch for your bear trap. You want to get below here first. Like that. Come back, give that a little kiss. And come lower. Above that level here, which is just above that fair value gap, right? Or that little order block. I want to see that come lower now. Got in a little early. But I want to see this accelerate through this level here now. Well, Michael's right. If he does want to see it accelerate for 490, here's your reversal. And that's exactly where if that's what he's looking for, that's what we're looking for to confirm his 490, then sure, right there. I agree. I wholeheartedly agree. Now I want to see this level here, full price. So I'm just above. I'd have to sit above here one tick now. Nope. Take out that low. Let's see if we get an order block above here. This guy and this guy here is my important one now. Ran right to the high. That reverses and comes through here. So I'm between this one here, and that one. If we close above here, then the premium array is sitting above us here. Looking right there. We did not get through this one. Look at that, right back through it. Sorry, Michael, you're not right now. It looked good there for a second, and then it reversed on us. What we took this low, reverse, take out that high, come back and find some support in here. Or if it doesn't give us this high before it takes that one out, then look for a mean threshold to give way. We did not get the high. You didn't get this order block. Watch these two here now. So I'm not saying he's going lower now. Let's see if we use this opening as a continuation there for more buy side maybe. Now you don't want to see it get lower than this candle here. Or sorry, these candles right here. If it eats through those, you're coming back into this range, and then you're heading back into here again. And welcome to a beat you up week. So we're going long again, off here, all the way down to one tick below there. I don't want to see I don't want to see a body get through here like that. 4 seconds. Let's see where that sits. Now you got to extend it. It's got to get out of the range. You're back below this level. You found support at this. You're looking inside the range again. This looks like it's barely holding on. So I'm saying more down inside this range right now. Looking for down here. 512. And you're inside this order block initially. Kick off there. Come back to here. Right there. Now you want to see it come back down into here. You've already hit that one already. You've already hit the mean threshold of this candle. So ideally, when you want to see the breakout above here, you want to see it get back into here. See how it never hit it? Now we've come back into the mean threshold of it. And now you want to see it accelerate through here and go higher. And if it doesn't, if it comes back through here on a close, then you're looking for another run back down into here. So watch right here. Let's move this one here to here. Good morning, Hans. It's long in oil. You're long in oil. Ooh, I would say short. Oh, well, yeah, I can see one of two. You're looking for a play off of here to go long, and you've got this one here. You've broken here to go short. So I could argue both directions on that one. I'm more apt to go short though. Sorry, I'm not on the same page as you there, Craig. Yeah, I'd like to see it dig down into. I'd like to see this hold for you, and let's start eating through. You got to get through this candle here on the upside to get back into that range for a long. Otherwise, this is just coming back to find support inside here to go shorter, and looking for in here and down here, deeper into that range, looking for that low to get taken at least. You got to get through here. I hope this holds for you, and you got to get through there. Where are you seeing what Michael does? That might be on the private mentorship here. Maybe we'll look. ICT. I haven't seen what he's saying inside here. Last time I see any comment he made in the private one was December 4th. It was yesterday. Must be on Twitter. I haven't seen anything in today's oh, here he is. Yeah. No. On Twitter. You must have said it on Twitter. He's not saying it in the private chat. All right, so we've got above here. You want to see this provide support here now? Just give it a tap and go. Right there. Mean threshold, maybe? You want to see it start pushing up hard. And it's not really moving with any sense of urgency here anyway, so looking for these equal highs above us again. And again, I'm still looking for that upside level. Right back into this support again. Now, does this support price, or do we give it up and start running back down to here? Good morning, Tristan. Thanks, D. Done for the day. Too hard price action for me. My best trade today will be a free crown for my old by Medicare. This you gotta love it if you get a new crown. You are crowned king of the day. Did it pan out for you? Sorry, man. Yeah. I looked more heavy than long. It could still go long on you, but right now I don't know what your drawdown is in that, and I don't know what your leverage is. We could still get support off this level, the mean threshold. You know, you've come right back to, I guess, this cluster here. Yeah. I wouldn't get excited about this till we got above here again and use this for support. SMT on ES. You get a reversal, trade back into the reversal. There's a perfect entry for a short right on the 07 candle. Time in a bottle would have given you a perfect entry right there. Time in a bottle, how perfect is that? Lovely for a short. Finish up right there. There to there. Done. And if you extend below that low, you can trade back into 50% of that range. Continuation, looking for downside objective would be down here. First off is 94 and then 93. Got a reaction of natural gas good that's coming back up. I haven't drawn out any levels on these things, so still looking for that line above us. Soybeans, just I want to get out of that level. Sugar's bouncing off this level. If we can get above, I'll switch up my sugar expectation. We can get above 21.27 on a close. I'd be looking for back up here again. We'll see what that candle there does. If we can get above here, find support at that, I want to see us get above this candle. But right here will be the start of the run, and there's nothing, all you got is this up here to be running into. It's just hitting the bottom of this box right here. We'll see if that turns into a wick or if we get a body finish up there today. We're back into that daily fair value gap above us, which is what we're looking for. That's still acting off here. We want to see this climb higher through here. That's good. It's working. Lumber finally, we said it was giving up the ghost, and it did. We said that would go lower, and it's going lower. Looking for a fill in that fair value gap now. And oil. Now poor Craig gets a long. Look at that. So you get support off of here. We ran back up into that level, degraded down. You want to see if this provides support. It did. And now you've got to run above here. See that? They literally closed on it, opened on it, dropped down. Now, is this holding price, or if we got the next price leg down to run through this? You want to see if that body closes up above here on the next minute or so. And then if it does, then we're looking for these either relative equal highs up above us, or at least the premium array inside this range. Don't kick yourself on this, Craig. It was a doozy. It was a tough one to call. Looking for a short, you got to get below here. If you were looking for a long, you got to get above there. And now you're slightly above it. So any retracement back into here, you want to see this guy stay open. That one's already been filled. And now you want to see it go. Now I'd be more apt to say, now I'm going to go long inside this range. Get a little tap down into here, 68.80. Let's see if that holds. Then 68.79 for the opens or closes. And then look for a run up in here. We're through here. Looking for this to go long again. I want to see it get through here. If that doesn't, if it just kicks off of that and starts taking out that low right there, we're going to go take out these lows. I want to see these order blocks starting to provide support now and just start climbing up like stairs. Yeah, make it gold. You can always knock your own teeth out if you need to make, I need to make a payment. Back up inside here. For support off of here now, for short. Got a reverse in here. Look for a run back down into here inside this range. Welcome to Chopsville. So you continue getting some chop here. I'd like to see it come down to right here, 121.512. This is just becoming noise. We're inside this here. I want to see us break that high on a close, and then you're looking for a run through here again, back to this order block. In between here and here, all you got is that little fair value gap above you here, and 528. So get through this on a close, come back down, give it a little kiss here, and now you want to see it accelerate up. Start taking out this high here. Just not giving you the kick you want. Now come back into here again. You don't want to see lower than 519. Just come back, give it a kiss. See, this is where you want to see it tap it, like from here, tap it, and then you see it, want to see it accelerate. This whole roll back into this range again. You don't want to see it get lower than the 9. If it does, then we could be back into revisiting lower. Don't write this off at 509 to 507. What do we got here? We're just banging off of that. We're not really, we hit the consequent encroachment of it, hit the bottom of it, rejected off. You wanted to see this hold. It didn't. It came back through it, then came back inside it to get support to go lower. Now you want to see it get below this low. Otherwise, bear trap, not just a wick. You want to see a body get below here. It starts to climb back through here again on the upside. Then you're back into, again, the horse is spinning around and it's bucking like crazy. You got to stay on the horse. When you're in these consolidations, it's not me just being flighty. It's me trying to stay on price action, saying it's going longer. Ugh, now it's going shorter. Now it's going longer. Now it's going shorter. And I've got upside and downside objectives to hit, provided my levels hold. And when the algorithm switches up on me, I want to be on that horse and say, you're not throwing me off. You're not going here. You're going here. If you get above, sorry, that level right there, I should draw this out so you guys can see it here. It's already trading through it already. So now you want to see a body get above here. And there's a close right on it. Come back, give it a kiss. Now you want to see it accelerate through here and go higher. I do not want to see this level get revisited. Continue going higher. Look for this fair value gap initial presentation to let go. And then you want to see that climb through that. Look at the low, the open, and the mean threshold. If the low holds, then you want to say, does it hold and create a little tiny, it's a little tiny fair value gap right there. See that little busy? Come back right inside it, give it a kiss, take it to the prom. You want to see that still going higher now. And I want to see this candle get hit right on 531. Back to the consequent encroachment again. Now the fact that it ate through this, it's a CE of this wick, gives me pause. We're just back to this wick. Through that imbalance, see there, on the downside of it. Now we're back inside this range again, so watch here. If we trade through this, we're back for these lows again. If we're just coming back to this order block, its body, you don't want to see the mean threshold go. Yeah, now we're looking for the lower lows. And there you go, lower lows. Look for this box down here. Again, we drew out at 507 to 509. Yeah, it's super choppy, Hadi. I'm not even playing in this anymore. It's not something you want to, it's switching up real quick on you. So if you're not super steely-eyed and catch the reversal, you're going to hit your stop loss over and over again. So now I want to see if this holds price. Now you've took out those lows. We have a reversal here. And you got this candle. You want to see it hold, and it's already wicked through it already. There's a body above here. So you're tapping this all the way down to here. So you're going to leave a portion open and then go higher. Bodies are still inside here. Wicks did a little damage. That rolls over. Look for this low here. the next price leg down, all the way down to this little fella right down here. Do not discount this. Next price leg down should end up right in there somewhere. Let's see if that works out. Oh. We get above this candle again. It's changing direction on us. Watch that right here. The next 5 seconds. 3, 2, 1. We've traded. Now you've got another swing. So you're back inside this range again. And we're right back up into back into here. Now if we close below here, looking for a deeper run here. This price leg's been choppy to get down here. We did not break that high. We're back inside this level here. We don't have a high taken for this, so not super strong unless we take that high. This is more support to go higher. There's higher. Forget that price leg swing down now. You're staying on the horse. Your reversal is here. Breaking structure to the upside. Upside objective. Bang, right there. Now, I want to see if that holds price now, or we're just going to reverse and come back down into this range again. Mean threshold. Also that first presentation again. Now some people might go, oh, we're going to go long, right? And this could totally reverse up on you. Stay on the horse. There, traded above it. See that? Give it a kiss and go. If I draw this out here, you'll see it's just right there. Kiss, away you go. Now you want to look for some support in here. Kiss, away you go. If you got intentions of getting up here and running for these equal highs here, get out of dodge. You don't want to be hanging around in here too much. We've got the highs swept now. You've got a reverse going on here. So just because of this consolidation, we could have that run all the way back down into the discount array down here. So let me get this out of here now. Ideally, you want to see it just come back, give this a tap here, here, or off of here, and then go higher. See how the bodies are still sitting on that little imbalance there? that little busy. Bounce, bounce. Now, if we get underneath it, there's the reversal. See, we talked about the reversal, right back into it. Now you're looking for a run back into this range. This is the next downside objective inside that range. So let me draw this one out here first. You're inside this order block here now. Mean threshold, you want to see that hold. Don't even touch this stuff. Hold it and go. If it doesn't, then you want to see if it closes below here. If it does, look for the downside one here. So we're back into this. Watch to see if a body closes below here and look inside the larger range for this one right there. See how we call the reversal even up here? You say you could be careful. We want to see it hit here and go. It did not. It started running through it, came back into the reversal, and then dropped down into the discount array. And now we can see this run back all the way back up here again. If it trades through this on a body close, we're back to our other original idea, which is down in here. That's why we don't forget these ideas. When you're in consolidations, this is a typical thing. You start to see a run high, run low. What's the downside objective? What does it need to break in order to get that downside objective? If that makes any sense to you guys. Joe, that's a pretty solid stance on medical profession. That's a strong opinion you have there. Good thing it's not a global opinion. Not all doctors are evil. See, now we're going to extend lower. Look for this guy here now. I don't even have health insurances. I have no intention of seeing a doctor, aka a pharma rep. Yeah, I can imagine them doing a lot of that down there. We have a lot of it up here. They push a lot of pharmacy. ES running down hard. Oh boy, choppy needs to take out the lower lows. Would you agree that we should still go down and take out 3 a.m. low? There you go. I agree, I guess. And don't forget that little pocket we gave it down here. We've traded below this now. I want to see it come back into here. Give that a kiss and snap off of there and come lower. I'm looking for these 489. Or actually, it's already hit that. I want to see this low get taken out here. And then go for down here. Come on down. Come on down. Let's see a big dive here. Rip through here, and you want to see accelerate because there's nothing in here. Consolidation, consolidation, cam. The only thing that's left is that last little fair value gap here. That's all you're trading in there, really. Well, actually, no, that they're literally touching themselves. So you want to see it get down into these bodies at 482. Come on, baby. Let's go. Accelerate. Accelerate your breath. Um, so to answer your question, yeah. Investment. RB, yes, go lower. Mentor, I need a big win. How can I do that? Well, we gave you the reversal up here. Looking for these levels to break, to go lower. So that was, mind you, it's hard to say, all right, this is going to be the time now, 10 o'clock, 10:45. You get the reversal at 10:45. And now you want to see a continuation on the downside. You want to see it come pushing fast. Like you just want to see a leg starting to really push through fast now. We did not get the upside portion. It did run out there. That guy's done. If we get through this candle again, then we could see a reverse back into this range here. We have a little tiny, it's not a reversal, it's a change of direction, I guess, in here. But run back up. If we lose this on the upside, then we're coming deeper into that range. See how the body's here, found support here. I'd like to see this turn around here and create a nice big price leg down. If we're looking at 50% of that range. Off this low. Eating through this order block. Last little line in the sand for all you short people if you're short. No, I don't want to see. Now we've traded above this level. I'm more optimistic that we're going to go higher. We're really in between here and here now. If we lose the wick close right here, then we're back short. Reverse inside here. Get above that. See, it was right back in there imbalance. So staying on the horse, it looks like it can go short again. I'm really inside this candle here on the wick side. And this one here is creating this little swing reversal here. Which one is battling? This guy here and this guy here. If we lose that to the upside, then we're coming back into that range higher. If we close below that, this reversal held price. And now you're looking for lower. Came back one more time, hit off here. It's got to get back through here in order to go higher. Now it's eating through here. It feels like it's more heavy for me. And we're looking for a return back into 496. $482. Yeah, we could do another big plunge down through here. So now I'm looking for that's nice off here. %50 puts you back into this guy here. Gold. Yeah, gold got a nice little reversal. Watch for a order block to get taken out to the upside. It does. If it continues to run through, look for the next one. It runs through that one, comes back, find support of that, look for continuation, and look for a 668 for the upside, or aim for this guy right here. Open. You don't want to see this candle's mean threshold get taken on the downside. You want to see that continue closing higher. So Ali, yes, I agree. It looks like a reversal right now. So we came back to that 62% inside this order block. Now we'll see if it starts to run back through here. Let me get all this stuff out of the way. If we get through that candle, look for higher prices again. For me, there's no reason to revisit this unless we're going higher. Literally to the top of it. Out at 50% of the range, good for you. So D, if you got in a long there to 50%, got out. Smart move, man. Looking for 502, 501, and 508. Nope. And I want to see that with a wick, like perfect. I don't want to see wicks doing all this kind of choppy crap. So bodies are still below the mean threshold. 502. There's the 501 right there. Little tiny imbalance. CB here. Hit off that. Look for this order block here. Support, come lower. Or watch it eat through here and go higher. So you want to see this give way now and start running down into 496, 495. What do you think of the daily time frame error idea? Because we had a large expansion day yesterday. We should ideally retrace 10% of yesterday's range. Therefore, we go lower till about 21,430. 21,430 for a daily range. Let's have a look at the daily. Yeah, I could see that. I somehow don't think we're going to leave these like lunch hour is going to come back and mess around. I don't think these relative equal highs are going to get left untouched. So, yeah, I'd like to see it return to 50% of yesterday's bull candle. And that would put you at 21,430-ish, right where you're calling RB. So, yeah, I could see it retracing back into there, leaving a portion open. But that's not it's not on there's no PD array there. There's nothing in here that would guarantee me any idea of landing on that. We could retrace all the way back down into here. Or that could just create a fair value gap for us. Come back, tap it on Friday. Just tap into it and then start pushing higher. So I like absolute areas where I like to see support off of, and on a daily candle I have nothing in there. It's not to say you're wrong. I agree. I'd like to see it retrace into 50% of that, especially on a Thursday reversal day. That would be nice. but I don't think they're going to leave this stuff untouched, especially during lunch hour and coming around non-farm payroll. You usually see it'll probably be a flat candle today, and then tomorrow you'll see some take out some highs, get back into that fair value gap that we want to see created here for tomorrow. Then I'll have sensitive levels. So wherever the low is today, that'll be a sensitive level that I can start looking. I can start mapping out tomorrow's fair value gap if this freezes in here today and leaves a portion of yesterday's candle open. But I do like your idea, though. I just have nothing to base it off of right now, for unless we have a 1 hour that comes down there and supports something on there. Let's have a look. Let's blow this up a little bigger here. So this is what you'd like to see, RB. I want to see on the hourly, I want to see this. Right now it's an hourly fair value gap that's been reacquired multiple times. See that? It seems to be holding price at this hourly candle. So if you want 3 or 4,930, you want to see 4,930, 4,930. I think that's what you wanted, isn't it? What did you want? Sorry, 430. I don't know why I said 4,930. So 430 would be in here somewhere. So what you want to see is you want to see this breakthrough here, this consolidation for a CAM Model 1 entry for a short down to your 430, which is the mean threshold of this candle. So that's what you're looking for. Displacement, retracement into a CAM Model 1 for continuation to 30. That's what I'd be looking for on that one to get your daily range expectation of 50% of your range, which is sitting back in here. Because this is holding, we have made a slightly higher high and we've taken out the lows. So you've taken out the highs and the lows in that 2 hours, and now we're popping back up. So I want to know if we're gonna continue to push through the new day opening gap. One more time, find the new day opening gap as support, take out this mean threshold of this candle once more, and then start running higher, taking out that relative equal highs above us. It is a slightly higher high, so it's a little more resistance. I could argue both directions. Right now it seems more bullish, slightly more bullish than it is bearish. This mean threshold is holding price on the body side. Wicks, you've already wicked through it once today, or today, the last hour, taking the lows. So yeah, new day opening gap's my upside objective for the day right now, or the next hour. And if we tap that, I'd like to see that then roll over and come down in here. What's that? Do you know how much, do you know much about candle range theory? Only the ranges that I look at for hours and small ranges, like this is all I know range theory, and is from like this swing high to that swing low to that swing high. And I look for specific arrays inside that. That's why I stay inside consolidations, and you can see how you can stay on the horse inside consolidation. So whatever your range theory is, if it's not that, then no, I don't know anything about range theory. Are you talking about the opening range? Are you talking about the daily range. Like there's different types of range theory, but you're talking about a range, a candle range theory. So one candle is what you're talking about. One candle for me has 6 different arrays in it. One candle has 6 arrays. Yes, I'm not sure. I asked you a bunch of questions there. So you said yes, answered yes, meaning what? Opening range, daily range. Let's see if we can get through here. We did. Tap it, go. Let's see if we can get through this one. Tap it. See if I draw this one out right here. I'm going to click on this. So it's 51, 511. 511 big figure. Okay, so 511. Right there. Let me zoom in on that so you can see it. Why it provides support. See that? With perfection. Beautiful. Extends through the imbalance. Runs up into the consequent encroachment. This imbalance right here. Taps it. And we get a nice strong reaction out of it. We have a reversal. It's not always a fair value gap. It could be a fair value gap and an imbalance, or just an imbalance. So here, you take the whole thing. Body traded below it, back into it here, into the middle of that candle, which is the mean threshold. Now, it would not be the mean threshold if I took, some people ask, do you measure the wicks or the candles? The wick was not the mean threshold. See that? That's why I like the bodies. So when you use the body like this, and let me just clear that up and just go equilibrium. Look at that. Boom. Right on it. Yeah. So that's why I don't use wicks. It gives me a little precision there. So reverse, you got to be quick to see this and this. You can either catch it right here, or you wait for this whole thing to get taken on the downside right there, trades back into it right here, continue on the downside inside this range from here to here. Anything below 50%, take your stop loss, move it to break even, take half off, and you can see how my retracement technique inside using the fib tool, half of your trade goes off. As soon as you hit 62%, you take another portion of your trade off, move to 50, comes back, takes you out. Have a nice day. Comes back, gives you another opportunity to get short. You can get short again right there. Start your trade all over again. Hits 50, move to break even. Take a chunk off. 62, take there. 70, it would have come back and taken you out right there. So you would have been right down to 70% before it took you out. Twice you could have been in on that trade. If you're using that old buffering type of, I called it buffering for some reason. It basically it was buffering any stop loss you had here. You get to, it ended up reversing on you, that you got to make money on the way down a number of times. Keep repeating your trade until it came back and closed you out and either ran above your high here, your premium level, and then went higher, or it finally broke down through your low and you maximized your profits. See how we're a deep run back into here? One candle. Yeah, I only know 6 different arrays on one candle. I guess you could break it down even further into 8, 9. You can break it from 6 to 9 levels, but I prefer. See, here's a nice little option trade entry reversal inside that range. That's why that short, you use your fib tool. Otherwise, if your stop loss was there, it was just taken out because you were looking for it to run further through here. And no can do, Mr. Kaninsky. Here's an imbalance right here. Imbalance right here. Imbalance right here. Larger range. I'm looking at where that could have came through. Through this one. Larger range. Larger range. Nope. That's the only thing I can see in here. Find support above here now. Is that candle theory, RB? Is that Michael stuff? I know he talks about power of 3. Which is basically only 4 arrays. See how we found support off the here and kept going higher. Look for this one here to get taken. Remember those relative equal highs? We said we wouldn't leave them untouched. This is where I think we're coming back to grab them. It's kind of like determining daily bias based on taking out previous highs and lows. Yeah, well, don't forget highs and lows. I get what you're saying there, RB, but that is one of the 6 PD arrays that I'm talking about. A high or low is on a previous candle is one of the 6 PD arrays per candle. So yeah, it's probably a theory that works quite well with what we learned from ICT. I'm sure you could I can custom fit that to whatever the theory is, whatever it is that you've learned. I bet you I could match that to a precision level in ICT's candle, whether it be the low of a breaker or the low of an imbalance or fair value gap or whatever, or just the previous candle. When you say high and low of the previous candle, what is that candle? Is that a breaker? Is that an imbalance? What is it? So there's too much. There's more information that needs to be filled in with your idea for me. So trading with James, what are your thoughts on YM? Do you think we'll hit previous day's low in YM? This one down here. Is that an up candle or don't stretch it out? That's a down candle. 44,893. 44,904. If we do come down, look for a bounce off of that. Let's go to the 4-hour and have a look at that. Yeah, see that right there? What we're looking at here on the daily, this imbalance right here at 4.9. This candle's open. It's 891. This candle's open at 903. Look at right over here. 881. And that would be 881, and that high of that gap, 916. So this right here is where I'd want to see that come down to. No more than 50% of this wick, and that candle's open. That's it. I want to see, that's already filled this in. So 50% of that wick, and then I want to see it kick off and start running for these highs. I don't think it's going to run down in here. It'll only run, my idea of switching up to run back down to this low here, Mr. James, would be if we lose the mean threshold of this on a close. If we close below this level right here, come back into it, look for support, then I'd say, yeah, that's what I'd be gunning for next. But until then, I would like to see that run for these equal highs, or at least see how the mean threshold has already been traded through. We've opened above it, through it. And I think if all we're doing is coming back into this range, into a discount portion of this range on a 4 hour. Look where 50% puts us, right in 50% of that wick. Interesting, hey? Sorry. Let me stick that right there. 50% of that wick right there at 44927. And that lines up with that opening candle we're looking for there. So that's what I'm kind of looking for. So no, I'm not looking for that low to get taken just yet. Run rabbit, run rabbit, run, run, run. There's the highs taken. You're very welcome, James. And don't forget that's based on a 4 hour. Now let's look for some confluences, my friend. Let's try and find some confluences that support that theory we start off with on the daily. So I see two. Do you see two of them right here? Do you see a high and a low? This is the issue we have right now. And if you can see this, you'll see it clearly. See this reverse here in this range we're in right here. We've taken out this low. We've run above these candles here, and we've traded back into them. See that? Right into the mean threshold of those two candles, or those three candles. You trade back into them, and you've also traded back into the top of this little candle. So not only have we run into that, we've run into right into the very top of this right here. Hit it, and then we start to run through this level. So you've got one that says I want to go high, and this one that says I want to go low. So if this one, see how we traded back up into that, well, we didn't quite catch it here. I think we're just a slight bit short of it here. So you want to see this get taken out on the downside. It does, and you want to see it trade back into that candle's high, no more than that high. And then also you see it go, poof, it gaps straight back up and through here. So the moment you see this trade through here and then create this fair value gap, you have to go, ah, crap, now we've taken this low and this is not balanced. So I've got this one here forming and I got that one there forming. So when you come back into this candle, you want to see it tap it right here and go, or right there and go, or the mean threshold. Remember, you hear me say it loses its love for me when it starts to get through the mean threshold. Look at that, literally trades right through it and clears it out on the upside. I don't like seeing that. I want to see this candle. It's really bullish or bearish when that candle holds. Or I guess, yeah, that one's buried inside here. Yeah, it's buried inside this candle. So the mean threshold of this candle, even that one, is traded through. So I go, I don't like that. It comes back up, holds solid on that. You think, great. Now, if it trades through here on the downside, that'll give me extra confirmation that I'm going lower, and I'd be aiming for this mean threshold here. So as it comes back up into this candle, you start going, oh, does that hold for me to go short? And does this hold for me to go short? And it did. And you go, oh, good. Now I want to see, this one didn't, but this one did. I did not trade above that to go higher because I'd be aiming for up here if it was. And then all of a sudden, does it close below here? No. It wicks down in there, but in order for that range to extend, it has to close below that, use that for support to come lower. And then it gapped up and you go, oh, now we're into a whole new different game. We're in between this one and this one. And I'm back and forth now. And I got to go, that cluster of candles there, if I can trade a body above that and get through this on the upside, I'm happy for a long. So you get a body above here, you come back into it here, and now you get a close above this level. Like we were looking for down here, we want to see a body close below this to get lower. Now you see this close above that, and you go, great, now I've got this whole section that could trade back into to go higher. So I'm slightly bullish on this versus bearish because we've now traded above this. We're back inside that imbalance, and I want to see that, or sorry, that inversion, and I want to see that start climbing higher. If it rolls over again and takes out this thing, because we've taken out that high, we've got one forming here, one forming here. If we take out this low on a close, we're back into this level and that level again. So now you're back to welcome to consolidation. Does that make sense? So you really have to kind of know what you're looking for. And what did we say? We said we wanted that to go higher, right? Because we didn't see anything going lower right now. And there's further proof that we've got validation that I'm still going higher. Until I get below that level and I eat through this, then I'm looking for this level. And if I can take that level out, then I'm back into what you were looking for on the daily. I'd be looking for a run on those lows, or a run deeper into this range, which is that watch that level, if that makes sense. See how we ran all the way back up, cleared those highs out, and we're back into support level, all the way back down. Does this order block get taken out on the downside? It does. Do we come back in, find support at it like that? Down. Exactly what I was just talking about over here. We're looking at this on the NQ. So here's your reverse. You want to see this candle get taken on the downside? It does. Does it trade back into it? Yes, it does right there. Beautiful entry short. Now you want to see this close. See, there's a little imbalance right here. I want to see that close below there, and you want to see that whole price, not run through it. Otherwise, we're coming back into this range, and you're looking at that fair value gap there now. So I've taken that low out. Look for this here. If we trade above it, which you just did, trade it back into it, you're coming up into here now. So you want to see that hit from here, which it just hit, right there to right there. It hit it. Now you're back in. You want to see it trade below here. Yep, they line up with one another. So you want to see, if you want to go bearish some more, you got to see it get below here, and then take out that lows, find support it here, and keep coming lower. Nice. RS is not relevant to Darren. RR is not relevant. What's your goal RR since you're trading on the small time frames? Are you able to catch more than 1.5? I don't use RR. I think it's an absolute crock of shit, to be honest with you. No offense if you're doing that, which I use kind of harsh words there. RR is not algorithmic. It is not algorithmic at all. It's just your idea of where you want to go. I want a 1.5 or 1. There's absolutely no R value in here. Absolutely no. That's a fixed stop loss. It's a gambling stop loss. I don't want it to go here. I give you a fail safe that says if it moves through here, if it breaks through that, we're on the wrong side of this. So wherever your stop loss is, you can have your stop loss super tight. If it breaks through this mean threshold here, on the downside, I'm on the wrong side of that. So if you want R value, literally entering off the mean threshold of that candle and your stop loss is sitting here, because you say if it breaks that, I'm on the wrong side of it. How many R is that? That's already 3 or 4 R. So it means nothing to me. It just tells me I'm aiming for my upside objective. If I hit my upside objective, you can add up as many R's in there as you want, depending on where your failsafe is. So R is totally irrelevant to me. Totally irrelevant. And I know people use it in the past. I used to use it in the past, but it's only because you're looking at a place where you say, I want, look at that right there to that freaking on the money. Now, if it comes back through here, you're out. Pay yourself right there. You've made whatever R that is. If it comes back through, you break even now. If it comes back and taps you, you made whatever R that is between here and here is your entry. And that's what 4, 5, 6 R there. And somebody will go, oh, you did a 6 R? Your R is all relative to your stop loss. And in our case, it's all relative to my failsafe. Does that make sense? I don't want to seem like I'm hacking on an idea. It just doesn't make any sense to me algorithmically. R is not relevant to Darren. It's a logical place to put the stop loss and T based on general levels. Could be a swing low, OB is a fair value gap. It's not automatically defined upon entry as being a 1 to 2, 1 to 3. Exactly. It does. Thank you. XU bull trap, I guess. Ooh, bull traps. I like it. Where's this bull trap? Bull trap. Bull trap. Where's your bull trap? Where's your bull trap, Ali? Tell me what. Give me the time and give me the time frame you're looking at. I don't see a bull trap in here. I just see this reverse, takes out this little high here, reversal, trades through it here on the downside, comes back up all the way back to a perfect place to short, take out that low, pay yourself there, move to break even, and you're deeper into this range, 50%, move your stop loss, blah, 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 aiming for here. If you get that, wait for some support. It's like we saw in oil, when oil did that little nasty bit of work on us for Craig. Where did it come? When we went short off of, I think it was this cluster here this morning. Where was that? No, it was over here. When we went short and Craig wanted to go long, it went long all the way to mean threshold of this candle. We get a small imbalance, a reversal here, trades through here, comes back up inside that candle, trades lower, takes out this downside objective right there on a close. See how you open below it? You come back up inside it, extend the range. You come back up into this range, 50%, whatever, equal lows. Reversal. We do not get above that candle for a swing reversal. We just get a change in direction back up into the mean threshold of this candle. Change in direction again. Finally clear out this low here. Look for that candle. Trades below it, comes back inside it, extends down into this discount array right there. Beautiful, excellent discount array. Well, you can't ask for better than that little puppy way down there. Hit it nicely. Candle gets through it. Look for this one here. You're already above the premium, so wait for a reverse. Here's your reverse, trades through it. You don't get a chance to get in on it. Here's another imbalance, trade below it. You're right inside it here for short, looking for this direction down here. This little fella here and here. Also that guy. First place there, 50%, it's probably here of that range. Trades back up into order block. Runs lower, takes up these lows. Look at that. Says I'm going lower. Ba-boom. Crude oil. Anyway. What were we talking about? Sorry, I got sidetracked. Gold. Give me your bear trap there, Ali. I don't see your bear trap unless you're on a different time frame from me. I'll look on a 15-second one, see if I can find something in here. This is a reversal right here, is a bull. Trade into this. See how it closes below that? So you'd wait until that high is taken. It's taken on that high, comes back, opens literally on it, continues all the way through, takes out that high, comes into rejection block of this one, does not take out an old high there, but it does give you a reversal. Old high here, reverse here. You trade back inside that imbalance right there to there. Continue on the downside. I don't see a bull trap. Oh, unless you're looking at this one. No, we took out those highs. Ah, are you talking about here? If you trade below the mean threshold, again, most sensitive one is this one here. We trade through the mean threshold on the downside. You put your stop loss here. It literally comes back, takes you out. If it does, get back in sync with it and say, I'm coming back inside that range. As soon as you see that high get taken, you automatically look at this and go, we've taken a high. Is this a bull trap? If that actually comes down and trades through here, keep in mind that there's your reversal above that high. You're taking that risk. So you got one that says, I'm going to go short on you now. And this one says, well, if it holds, then I want to see it hold right there. And it went boop and started running down and literally took your stop loss. So you took a loss. You're back in sync now. You know that that reverse has happened. This one here. Now, if we trade below this, I want to see this level before we extend. Yeah, you want to see this level trade below before it taking out that low, and then trade back into it. Once it takes that low, now you look for this level, and now you've got this new reversal starting here. And you see how we traded up to it, above it, below it, wait. Or you're going to get beat up inside here. Looks like it might be a little heavy because you still have some downside here yet. So I'd want to see this consolidation now turn into a cam model that you can trade off of. And watch that on the cam. That's a cam model setup there. See if you can see a model forming, and you can get in on that for a long. And think about a long would be back into this range up here and here. And a short would be a displacement down. So you see this displacement up already. Upside objective is here. Okay, so consolidation, displacement, cam model 1 entry right there for short. Back to a cam model down here. Cam to cam, burp, burp, burp. Bang, hit the top of it here. All right, so see if that provides support, because you're looking inside this whole range here. That's more than 60%. So if you are short on that small little run here, there's 62% on the money. There's 50% here. Now, if we start to get this run back up, look for this. See how 62% optimum trade entry reversal right off of a level we're looking at. We've already highlighted. Cam model, cam to cam. trade back up into, no. Fair enough. If you don't use risk reward measurement, how do you determine your loss, your stop loss in dollars or risk reward? Ah, okay, that's good. Risk reward is once you study your, let's say you get wherever your entry is, that's based on, so you pick your leverage, right? If you're going, I'm only going to trade $50. You look for your perfect entry that supports a $50 maximum leverage. So if you put your stop, say you put a trade in here and you drag your stop loss to that level. Let's say this was, let me give you one that we look at here as a reversal. Let's give you a reversal so that you understand where your risk reward is. So if you took out this high and you saw a reversal coming into here and you say, if I come into there, my stop loss will sit up here. So you're dragging your stop loss to 50% because you know if you put it up here, let's say you're going to start up here. That's typical stop loss, not a fail safe. And you want to see your entrance come into that level. Let's say this comes up into there perfectly and triggers your entry. That distance between where you enter and where you put your stop loss has to be your 1 or 2% risk. If it's more, then you're over leveraging. And your R thing means absolutely nothing. I'm looking for down here. You can add up your R stuff after the fact. I'm just looking to trade internal range liquidity. It has zero to do with R factor and only to do with the amount of leverage I put on based on a stop loss that's sitting here. That's it. And you will adjust your leverage here over and over and over again, depending on if you stick to the rule of 1 or 2% of your account, then that's all I can give you for your risk. And you'll see how my risk, I cut my risk down right away. If I'm wrong, my failsafe will tell me I'm wrong, and I get out before my stop loss gets hit. So that would totally affect my risk as well, because my failsafe is my watching price action. If it fails at that point, out. That's the rule you have to follow. And again, once you've studied price action enough, you won't worry about R factors. You'll be worried about if it breaks through that little freaking bottom of that candle right there. If it breaks it out on the upside, I'm on the wrong side of this. I'll get out at a break even and I'll get long. And that's being confident enough to watch price action enough to know that you want it. And you see me calling that with pretty close accuracy anyway. So that's what I'm looking for my risk reward, if that makes any sense to you. So it's always 1 or 2% of your account, or 1/4%, whatever your risk tolerance is. Does that make sense, RB? See how we've broken this, we've taken this out here. This short, you want to see that stay below here. Body trades above it right here. You're on the wrong side of it. You're going to go long and look for extending that range. It comes back into it. We have a body that trades above it, trades back into it. Watch it take the high. So your stop loss is sitting down in here. That's where your entry is. And your stop loss is just below here. So as soon as it takes that high, my stop loss moves to break even. Because if it reverses and comes back through this on the downside, then I'm looking for this here. So that's my fail safe. Very low risk there. High taken, move to break even, pay yourself there. The risk is off now. Now you just got a free trade. You're just sitting there watching to see if it pans out and you start run higher into that range. Does that make sense? oh, I could trade internal range liquidity like this. I don't like trading internal range liquidity like this, but if it's a nice little day where you can go in and out a dozen or more. Now, some people say that's over trading, but is that over trading if you consider that that wasn't like what we just took there was a 10 handle run from here to, well, not 10, some like 7 or 8. If that's what you want 10 handles, you'll get a lot of trades in a day, right? So how many trades I take a day is, it can clash seriously with someone's moral compass or your trading compass and say, you know, that's way over trading. It is if you're not the kind of person that likes to trade 12 times in a day. But it's got to be based on solid staying in price action. And we're on a 15-second chart, so small ranges appear all the time. So you're captivating a lot of quick trades, if that makes sense. See how D caught that and went long, took 50% of that range, and then got out. Now, if he did that 100 times in a day and just kept nibbling away at it because he's got a set of rules that he sticks to, I wouldn't fault the guy for 100 trades a day. If every one of them's making him money, or 70% or more is making him money, if you're following the rules and you're staying in the price action, you have to watch it enough. RB, you have to watch that level right there was important. And look at how it came back to that level. Extended the range inside this range here. Pull your fib tool. Use the fib tool method for managing your trade. Came back into here one more time. 50%, move to break even. Zero stress trade. Take half your trade off. It's 62. You're sitting at 50 right now. Then also it runs to 70, you move to 62. It runs to 75, you move to 70, you stop. You pay yourself there. You literally caught from here to a perfect exit right there with a portion taken out, and you closed out your trade right there. It did not come back anywhere inside here to tap you out. So it would have tapped you out there. Then you get optimum trade entry reversal, and it literally comes back against you. But you would have paid yourself like Hadi just did inside this range, even if you're on the wrong side of this and you're coming back into that candle as an upside objective. If you don't know that's an upside objective and you're just using the fib tool, I gave you a fib tool technique for people who don't understand breakers and imbalances very well. It's a great way to manage your trade, because if it reverses an option trade entry reversal, you would have caught all that beef on the way up, and then also it reversed on you and kept coming down. Higher time frame people say that's going lower. Yeah, maybe. It's going to give you some money inside here. You got out of it real quick, so that's managing your risk. Again, you may not approve of that kind of trading style. That may not be your trading style. That's fine by me. I totally respect that. But you gotta admit there's a level of precision in there that if you're feeling too stressed to trade that kind of trade, then don't trade it. See this little imbalance right here? Look at the bodies coming right to that. How sexy is that? Literally bodies, box to box trading. Hadi's probably crawling all over this right now. You get to do that whole trade all over again. Look at that. See that imbalance right there that we hit before? Look at the bodies. You get the trade up to 70%, start the whole trade over again. That's that buffering thing I mentioned earlier. You start that whole trade all over again. Stop loss is sitting down here. You hit 50%, move to break even, pay yourself, and you're aiming for obviously the fair value gap fill inside this range here and that little imbalance. It ran right through them. Great. Take out the mean threshold. If we can find some support off of here, look for that to run higher and aim for this fair value gap above you. If it trades through it on the downside, right here, take your trade off and move to the sidelines. If it trades through that side, watch for here, get support, look higher, get back in sync with the market. Are you profitable? As when I tried to take so many trades, the commissions along will eat your profits. That depends. Yeah, that's totally true. If you're super low on your leverage, if you're trading micros, then yeah, it may not be profitable for you. You have to decide how many handles you need to run for minimal to make profit. And maybe that's our value. I don't know. I'm trying to argue your side of it now. Yeah, but usually like for TradingView or Top Step, if you're using 1 micro or 3 micros, you're looking at $1 to $3. And if you're trading 10 handles, that's $30. So you're going to make money. So the number of times, again, don't worry about the number of times you're trading. It's the quality of the times that you're trading, because they're not always going to be just 5 handles, 10 handles, right? You saw some here for 7 handles, some for higher. That's 10 handles from there to there. Yeah, they're all going to vary. That's why our value means nothing to me, because they all vary. You might get 5 handles, you might get 20 handles, 23 handles, because you're trading inside a range. 50%, the fib tool has 0 to do with our value stuff. Your trades, if your commissions are eating you up, you're trading way too small. And you're looking at this, as soon as I put a price on it, you're looking at the dollar value over here. So as soon as you see that little tag there, it says how much money you're under. Some people trade looking at this instead of looking at where you want to go. Once you see price action acting the way you want it to act, and it's hitting key levels, you won't have to worry about our value stuff. You won't have to worry about commissions, all that. It'll hit exactly where you want. Right now, it's obviously not acting the way we want it to act. Now, you imagine lining this thing up with a daily chart. We get a daily chart or an hourly chart that looks like it's setting up a nice little reversal. Like, for example, let's give you one. Like here, see this consolidation? We have a body trade above the consolidation. I guess if you can incorporate these wicks, if you like this is your consolidation, body trades above it here, you come back, tap the wicks. If you're looking for your entry right here on a 15-second chart, dig down and find your reversal there. Look at that candle yesterday at 3 o'clock and look for the reversal yesterday at 3 o'clock. Let's see if we can find it in here. At 3 in the afternoon, so that's 1500 hours. I don't know if it'll, yes it did. Okay, good. Here's 1500 hours. Looking for our reversal. So here's 1500 hours right here. Here's your change in direction. Didn't quite take out that low. We have a change of direction. Wait for a body to break above this high. We have a body break above that high. Do we get a return to this old high? Nope. Wait for this one to get taken, or this one, or get out of this consolidation here. So if you want to wait for the consolidation to get out, you look over here. You have a body break above it here, and you put your stop loss right below those 3 candles. Or if you're going to use all of that, your stop loss would be sitting down here. You go long off of that, and eventually you get the takeoff. If you're not happy with all that stuff, you just say, I want to see a decent break in market structure to the upside. So you wait Here's 5 or 15:30 afternoon. We take out some lows. We get a nice little reversal here. Trades above. Does it come back inside this candle? Yes, it does. Stop loss is 1 tick below that low. If we use that as our standard body breaks above high, you're short. There's where your stop loss is sitting. It came down, hit you, and then from there it left. Oh, and would have come down and taken you out there had you not profited on the way up. That was 1500, was it not? Let me get rid of this thing here now. Reversing to here. 1500, yeah. Oh, that was already done up there. Am I in the right day? No, that's still, that's the 4th. I was looking at the 3rd. It's another day back. It's like, that doesn't make sense. But you get the idea. You're looking for this optimum level on the day, on the weekly, hourly, daily, whatever higher time frame you want to trade on, and you want to get your long there. Cut down your trades. You don't have to do 100 trades a day. Not that I advocate 100 trades a day, but you know, if you're a micro trader, you're going to trade lots. If you're trading on an hourly basis, based on the same stuff we're looking for on a 15-second chart, and then you look on a 15-second chart for that perfect entry, and you take it, well, there you go. Off to the races you go. And when you get into some consolidation like this, you know to stay out of the market. Because look at your hourly chart now. It's just shit. There's nothing in here for you to play off of. Right? You're looking for highs and lows. Hopefully you're running at a previous hour's high or a previous hour's low. I don't know if that helps you or not, Harvey, but that's my theory anyway. So when you're inside these ranges, it gets really choppy. You got to really stay on the ball here now. You're getting into lunch hour. Lots of bouncing around, and it's Thursday before the Friday non-farm payroll. So fair value gap, you trade above it, you come back inside it. You can't ask for better precision than this, you guys. Right there, perfect entry. Stop loss is sitting here. The moment you take out the high, move to break even, or upside objective. If you hit it right there, move to break even, pay yourself. If it continues to run through and takes out this high, great. If you took all of it out there and said, I'm out, the moment it takes out that candle on a close and comes back to it, I'm going to get long again. So you're in here long, aiming for imbalance right here, runs right up. Look at that, right into that imbalance, then reverses. So as soon as it hits that imbalance, move to break even, pay yourself. Now from here, that candle's high. That's precision entry again. You had it here and you have it here. So you have a precision entry here at 27 and you pay yourself at 31. It's 4 handles. Is that worth it for you? You decide. For me, it's a premium. You're paying a premium to offload at a higher premium. That's what you're expecting. If you take that high, if you're aiming too high, because you keep jumping outside of that, you run into a larger range and skip the range that you're in, you get beat up. Literally trades into this mean threshold of this candle and then reverses on you. If it takes out the low on that candle, look at that, see it traded below it. So now you start to say, I'm moving to the sidelines. It has to take out this candle's high for me to start getting back into a premium array up here. Now, if you use this candle as your support candle, it does not take out the low of that candle. See that? It took out that imbalance. So whatever your rule is, whether it's stop loss sits here, or I don't want to see that get taken to the downside. Otherwise, we're potentially coming back into this range again. The moment it trades back through it again, you go, okay, now we're going high again. So it traded through it, did not give you an opportunity to get back into it. There's a little imbalance right here that it's working, and then finally took out that high. You're back inside this little imbalance again. That little imbalance right there. See how the reaction off of it? Pop, pop. Inside here. Now one of those two is going to let this go. We either pop through here, get through the mean threshold, or come through the mean threshold of this candle. So now we're working. There's the probe starting to get through it. So far this one's holding. So these two are battling. For me, I look at those two and I go, who's going to win? Bing, bing, bing. It's bouncing back and forth. It went to the bottom of it, the top of it, the top of it. Now, it's already drilled through twice now through the top of that. So far, this is holding. That's what I look for when I'm wrestling two candles. See that? Now there's the indication to see you want to go higher. There's the mean threshold. You see that hold? And right through. Go on, take it. Take it. There you go. And where do we run up to? That little imbalance we talked about right there. Hit it. Now the next little one is right in here. Bang. That's the top of it. That's the bottom of it. Hit it. I don't know how much more clear I can make it for you folks. That's a level of precision. And look at the reaction off of that. Isn't that beautiful? Does that not like fire you up? Does it not go, why, yes? And yes, you too can see that. It'll come. It'll come. Just give yourself time. I think that's going to be it for me. Unless you guys have some questions, if there's a stock or something you want me to look at, I'll have a quick little peek at it, give you my thoughts on it. Ba-bom, ba-bom. So 1 hour. We have a high and low. Those two are still battling. We ran through it, and now look at this. We're running through, wick through it again, and now we're running through that one more time. We'll see how this level closes on this hour. You don't want to see this wick give way on a close. These two candles here, you're lying in the sand. You don't want to see that move more than 50% of this wick. And you got equal highs above you. Thank you for you marked analysis commentary today, sir. You're welcome, Del. It's nice to be appreciated. I appreciate your appreciation. Not getting much lift out of here. I was hoping we get more lift out of here. And G, natural gas. So we run back up into that breaker right there. We hit it. Now this feels like it's going to come down. Not what I want to see in gas. Still looking for that upside objective there. Still pissing around with soybeans. Looking for upside objective up here. Now that we've broken this high, that's what we were looking for this morning. Wanted to see if sugar was going to get above that level. It did, and look at it. It literally closed above it. And then what did this candle do? Came, went, boop, gave it a little kiss, took it to the prom. Now I'm looking for the rest of this to fill. You got to get above 2137. Sugar, I tell you, I should start trading sugar. I've been killing sugar for the last few months. So yeah, I want to see that. That's like freaking precision. If you're a commodities trader, you're welcome. Daily fair value gap right into the consequent encroachment right now. So here's the thing. Do we get through this and get into this gap again? There's a little small gap in here, and the rest of it is in balance. So I want to see if we get through the top of the daily fair value gap and then start working our way to the rejection block. If this holds, our downside objective is still fair value gap below you. And looky here. Look at that. Just rolling over live cattle going down into here. It's not going to take the highs. Retail's loving that. So you want to see it get below the consequent encroachment of this now. I want to close and then start running into this 184 level. Come on up, baby. Close above this. Come back, use the consequent encroachment to go higher. Cocoa, look for cocoa to come back into here at 9531 to go higher. If we close above this. Lumber, we said was coming down, and it's coming down. Little piggies still inside the range, got nothing for them. Oily oil, look at that. Look at these levels. Tell me that level's not important. Look at that. Freaking boom. Initial presentation. Come on. Of all the shit that's hiding in here, tell me Michael didn't give you a piece of gold. It's a nugget of information, my friends. Just a beautiful, beautiful little PD array. Don't write off your first initial presentation fair value yet. If Abs was here right now, he'd be like, yep. Abs has been studying that thing for years, man. And now it's standard protocol. I bet he's smiling to himself saying, yep, I saw that years ago. So anyway, you got this reverse right here. Little body comes up, a little tiny wick in there. Look at that. Just taps the bottom of the new day opening gap or new regular first presentation, say. Drop below here, come back up inside a little. That's not in balance there, is there? No. This is an immediate rebalance. I treat this as a fair value gap. And if you don't know what immediate rebalances are, don't sweat them. Don't sweat them. So when you trade through this candle, look for it to get reclaimed. So when you trade through it, look for it to get reclaimed in here. We don't get it here, but watch here. Boom. Hits it right there. Reclaims it. Goes lower. If that's the one you want to key off of to go higher and you lose the mean threshold and you start to eat through it, you go, okay, you're looking for this downside objective here right now. Before that gets hit, and it's already been hit right here. These two are important. When do you trade above them, right? We want to see it come back into that to go higher. It did not give you that, so you look for the next one. It did not trade above that, so here's your fair value gap. Reverse back into here. Takes out the highs. Again, are you paying a premium to hopefully run for higher prices and inside a larger range? There's a bunch of questions you have to ask yourself before you initiate a trade off of these levels. And it goes lower, takes out that candle on the low. Look at that. And then closes on the low, and then look where it comes back to. Bing. Tell me that's not important level, and says, guess what? I'm going to go lower. I'll give you one opportunity to get your trade off long for a trade on short, because the horse is just about to turn. You see his head look in that direction. I looked in that direction, come back up. I'm going to turn, slam out. It takes you out. Go back, check it out, man. You'll see. You'll see. So we have a change in direction. We have a break in a low, an imbalance right here. Trade above it. Look for this candle here. One candle rips through this on a body and through this tap. Go longer, comes back, taps it one more time. You're coming back into this range, 50%, 62%, back into that order block if that's your objective, to go lower. And then as soon as that high is taken, you see a reversal happening here. Body trades below it right here. You trade back up into it here, and we're back inside this range again. Now you want to see a break in market structure to the downside for this to continue going lower. Thank you for that. Grammar was scuffed, LOL, but that grammar was scuffed, LOL, but marked analysis commentary today, sir. But I got it, yeah. Be Jolly. I haven't seen you before. Welcome, P. Jolly. Yeah, thanks for doing this. First time here. It's nice to have a fellow trader sharing thoughts live. Welcome, P. Jolly, too. I haven't seen you in here before, and welcome, welcome, welcome. It's nice to see you in here. And if you're doing this live and you're helping other people out, I hope I can give you something to help all your people out. I don't care. I'm not taking any major credit for Michael's stuff, but if I can help you out to help out your people, then go for it. If you're a live trader, you're welcome to pop in anytime. Do you consider his market maker model? I look at it after the fact. Once I see that, if I'm aiming for a range, let's say we got a huge range and there's an original consolidation, I think, okay, I tend to look for ranges. And then if you see a market maker sell model, I like to look for the second stage distribution for a unicorn trade, but I'm not always looking for a market maker sell. I always look for a break above an old high, and I look for reversals. That's all I do over and over again. That's all I'm trying to show you is the market maker sell models are all great. They're a very overall encompassing look at the market when you know you're in that. But I can tell you, we can catch those market maker sell models. You can see you're in a market maker sell model the moment any one of those models, just pull a market maker buy or a sell model, and you'll see this setup happening. And then you go, oh, I'm in a market maker sell. Yeah, no kidding. We got into that like in a 15-second chart or a 1-minute chart ages ago. So looking at the picture and saying it's the picture of the mountains, and you got in when the peak and the snow was happening, and you got out of the snow and you go, oh yeah, I got back a little further. I'm in a market maker sell model. Doesn't change anything other than the fact that now I'm a little more biased inside a larger range, saying I want to see this original consolidation get taken out on the downside. And so far we've got a continuation. We want to see that original consolidation get taken out. So I'm looking for 608 or 86. See that? That was a total dyslexic moment. 6806. See, I said 608 backwards. And there's 622. So I'd like to see this come down some more. It would have to break this high here for me to go back into this range. So if this turns into a market maker buy model on a crude oil 15-second or 1-minute chart, it would have to break that high for me to start getting back into this range. And an overall objective of way up here. I've been using the first consolidation like you would use the first presentation. Excellent. And is that working well for you, Del? If it is, thumbs up, buddy. Good for you. ATH, all-time high is taken. D. What did we just take out that I again? Gold. What did we say gold was it going to do? I can't remember if we said it was going higher or lower. You guys will have to remember what I called for gold. I go 6 something. Yeah, returning to this. This looks beautiful here for a return into here. Continuation on the downside. I'm sure I said lower. I'm sure I gave you low. Consolidation, cam model 1 entry. Look at that displacement candle, pop back in, say thank you very much, and away you go. That's a nice cam model right there. Bitcoin, we wanted to see it get through the 1 hour fair value gap. It ran through it. Are we looking for this to go higher or lower? Right, so we ran through it, and now we've come back into this candle's low. Looking for a run back into this range. Looking for my next downside objective to be a 1,000 or 100,000 right here. Looking for that. See if that fills in. Look for consequent encroachment of this now. So you got your 4 different arrays inside here. Your quad. Put your your 4 levels inside that, the consequent encroachment, which you've already hit right there. You want to see if that holds price now. Go down to the lower time frames and see if you can see a reversal going on in here. No. I see a slight change in direction inside a range, but if that comes back into here and keys off of that and comes down lower, which it's doing right now, it would have to get through here on a close, and we're going to continue going lower. So the consequent encroachment of that BISI you saw on the hourly, I'm expecting it to go a little deeper if we take out this candle's right here, that on a close. See these imbalances here? You got this candle. You've bounced off of that. You're coming back down into here. So you're either coming back down to go up into this premium arrays here, and you want to see this get taken to the upside for me to start getting more bullish. Otherwise, bearishness still. We're looking for the retracement back into here. We called that out this morning. So unfortunately, it's still coming back into here. I wanted to see it get up into our upside objective, but we did hit that, our first one. We saw a retracement, wondered if we were going to get below here. We did. We came back into it and then extended the range lower. Then you traded back up into it once again. There's an imbalance right here. We come back into this candle's open. Mean threshold is not hit. Body's respecting the open. Drops down through the mean threshold of this candle. And we're digging into this fair value gap busy here. We're waiting to see if this consequent encouragement holds. We wanted to see it just tap this high here and leave a little portion open and start going back higher. If it runs through there, look for the open of that candle. If we lose the open mean threshold, if we lose the mean threshold, we're digging down deeper into these range on a close. And Vita hit that level we're looking for up here. Nice. Now, do we get a reaction off of this and start to come back into this range, or do we now close above that level and then we're looking for a run into the rejection block above us? Look at that, bounce, 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 right off the top of that box. Tell you the box, and that's trading Boeing Canada. I think that's, no, Boeing America, the NASDAQ. And look at that reaction. Right, so inside this huge range, watch. There's the reverse. You come back inside it right here. Boom. What am I aiming for? Here, if I can get through this, find support at this, I'm aiming for this. Look at this. You get through it, found support at it, and then kept going. Where do we aim for? Right here. Look where we came up to. I tell you, you guys, this shit's happening everywhere. Once you see it, you cannot unsee it. It's that consequent encroachment of this premium rate. So you literally got in off of perfect entry. And if you want to get there and say, that's it, I'm done, I'm out there, you got a perfect exit. It would have came back up a couple more times, ran through, and as soon as you see it take this low consolidation on the downside, then you think, great, now I'm back inside this range again. It takes that low. Do you get to go back to it? Nope, you do not get that. So wait for this candle here to get taken on the downside and then traded back into it. Remember that reclaiming that one? It traded right through it. I tell you, this reclaiming thing, I've just started seeing more of this. Watch. When I take that candle right there and I go Christmas, Christmas. Trades through it. Look at that. Bing! It hits it and away we go. Looking for a discount array inside this range here first. It hits it and then retraces back up. This guy here, rolls over, takes it out on the downside, and now we're looking for this guy here. We hit it right there, literally went boop, and then ran through the lows. I love it when you see it, man. When you see it, you cannot unsee it. Oh, it did not quite give us our high we're looking for, so we're back inside this. I want to see it key off this order block here. I have trouble with these gaps. I like to see candles. Gaps really kind of throw me off, so I'm trying desperately to stay true to the algorithmic read. It's got me. I'm not sure. I don't want to see it close below this candle's low. If I see it close below here in this mean threshold, we're coming back into that range there. Mosaic. Ooh, it's not doing what we wanted to do. Dang nabbit. It ran through our level, literally gapped down below it here, ran back up to the 50% and then continued to come down. So we're looking at this downside right here. Do not get through that volume imbalance. That's a shame. As soon as you see that get taken, you think, oh, that's not good. We're coming back into this range. It did. Now we're right back into that gap there. So I want to see if we test. We're through that breaker on the downside now. That's a shame. Our buddy Craig is not going to like that unless you're looking at reloading on position. But we got relative equal lows below us. If we take that out on a close, then we're running for lows again. And there's lots of equal lows down here. So not bullish at all on Mosaic anymore. AMD, somebody was calling about AMD. We wanted to see it come back into that order block. It ran above, it's come back into it again. We don't want to see the mean threshold of that giveaway, and I want to see this start to trade through here. Otherwise you got this candle would be nice to get some support on that to push through and aim for this upside objective here. All done, Darren. All done, brother. Thank you so much. Enjoy the company. Gonna grab some lunch. See you tomorrow. See you a bit later, Derek. It's probably gone already. Thank you. I have subbed. Thanks, Polly Joy. Or Polly. I'm gonna call you Polly Juice. I don't know why my dyslexia keeps cutting that Polyj. So my brain's calling you Polly Juice. You're the Polly Juice potion. You're going to be Polly Joy now. Polly Joy or Polly Juice. Sorry, buddy. And that works. You will be affectionately known as Polly Juice. Oh, come and give me that freaking level finally. How painful is that? Look at that key off of that level. Reverse. Joy. Watch this get taken on the upside. It comes back inside it. Oh, lovely. Look at that. And it's finally coming up to, where do we get 664? My line is 571. Come on, just give me that. That's my vindication for the day. A week. We're looking for that damn level for a while now. But you talk about getting beat up in there or what, eh? Even though we're looking for that, it's an upside leg, and that was the objective. That's just a shitty way to get there. Look at all that bouncing around. You'd really have to trust that you got your next price leg. If you were looking for that price leg and you left that alone, when we took that initial price leg from here up, as soon as it broke that high and you got long on that and left it and said, I'm aiming for there, and if I get it, great. Consolidation, as long as we don't break below that low. You could have managed that on the way up. I've got to learn how to hold. I'd love for Michael to teach us how to. It's not. He doesn't need to teach that to us. I know why. That's what you get when you trade lower time frames. So when you're, I think it was Dell was asking. Was it Dell or? No, not Dell. It was. RB, yeah. When you trade multiple times in a day, you're going to get thrown off. If you're so used to trading these micro levels all the time, you'll never enjoy a big run day like that, unless, of course, you've got micro levels that constantly support price going higher. Unless you get in on the perfect time frame, then quickly come out of this trade and then go into a 15-minute chart and manage it on a 15-minute chart. And even a 15-minute chart is crap. Or you move into an hourly chart and just, once I'm in my trade, now I'm going to manage it on the hourly basis. And that's it. And stop looking at the 15-second chart. I think that's where I will eventually evolve to. Because I see every one of these reversals. Every one of these changes in directions, when the algorithm's switching it up on me, I can see it. I see it. And then you want to be in on that. So you want to capture every reverse, every turn. It's the reason you micro trade it, right? And that is not for everybody. Is there any particular asset you guys want me to look at before I head out? Tomorrow's non-farm payroll. We might be able to catch a nice, when the markets start to smooth out a little bit, we might be able to catch ourselves a TGIF Friday or a post NFP trade. Darren just joined in today. I was at work. What's that yellow box? This one? I have lots of yellow boxes. They're a 1 minute level right here. That's that one. That's why we cut through candles. How many people will be looking at charts and saying, oh, I'm looking for this little space in here? Well, if you were understood the narrative all morning, you would know why those levels become important and when to break them and when they find support and when they don't. What you expect inside a range. They all have a narrative behind them. They're not just random levels that I've picked. They had a narrative, and when you're here in the morning, you'll see that. Not that I'm blaming you for not being here, JC, but that's where that came from. And in case you're wondering why it's tucked away in here, it had a narrative all along. Same with this one here. So the body traded through it, came back, gave it a tap, and went higher. What's TGIF Friday? Mark Hampton? Mark, TGIF Friday is the golden secret of the market, let me tell you. No, TGIF is called, thank God it's Friday. It's Michael's retracement. Usually what you'll see is on a week, when you see a high form, usually today, this afternoon, you'll see a high around 2 o'clock. Or this could be the high, the new high of the day. I still think I'm going to get my damn level here today. Or up to, remember we said up to 93, 95, somewhere in here. 595, so 593. So if we run up into there, create that high, these relative equal highs, they're not going to leave those untouched. We got equal lows, equal highs, drop down after lunch here, finish it. Oh, you're already into 12:30. Yeah, after lunch, take the low, come back up, take the high out, create the high of the week. And then for Friday, you'll see a typical retracement back into the range. So for TGIF Friday, this is what we mean by this, Mark, so you get an idea. So this is Thursday, Wednesday, Tuesday, Monday. So Monday starts, our beginning of our week starts here. So you go like this. You go from this low to, let's say we get up to my 95. Let's say we get up to here. TGIF Friday says that we can expect a TGIF. And make sure you always have a retracement. So I can expect a retracement if I get to 594, by the way. Wherever the high is that's created, probably this afternoon. If we get that high, the markets tend to, on a Friday, retrace back into 20 to 30% of the weekly range. So you're looking for 463, to 398, and it will land it will close somewhere inside that box if this hits here. Okay, so we'll see. If it runs higher, you pull this up a little higher, and you just, wherever it ends up closing up on the day, again, look for the hour reversal. Then we can expect to see that being the high of the week, and then continuation on the downside on a typical Friday, but it's TGIF Friday. So you could get a big wick up there during the TGIF or the non-farm payroll Friday. Because it's non-farm payroll, you can get these big wicks. So you can't completely count on today giving us the high. If it was a typical week without a non-farm payroll, that's ideally what we'd be looking for, a Wednesday or Thursday, a high in the afternoon. And then the TGIF Friday is that retracement back into a 20 or 30% of the week. I hope that answers your question, Mark. Anybody else want me to look at anything? You're welcome. Anything else before I go? I think my wife's heading out today. That's why I've got a little bit extra time. I want to be able to do some time in here so we can just spend like every day in here, all day. Do some trades, take an account. I'm thinking of starting up an account at the beginning of the year. Let's see if we can turn it into, we can double the account in the year. Typically, you look for 2%. If you follow the rules, you can get a 1 to 2%, 6% per month. Compounded, you should be able to double your account in a year. So I might want to try it and do that with you guys. For the new year, I'm thinking about it. Anyway, keep your eyes on the prize. My prize is coming up. Come on, baby. Joey's six-pack. I'm going to call you Joey six-pack. Joe six-pack GDXJ, he says. Could you look at that? Most certainly. Let's get rid of AMD. GDXJ. Vanek. Oh God, I got Vanek. I have some Vanek stock, a Russian stock, and I got my ass handed to me. I bought it at a super low rate, right, and then they went to war. I caught it right on just before the war started, and then that's it. They wouldn't let you trade it anymore. So I've been holding a Russian stock for a long time. Vanek Junior Mines. Is this the one you're looking for, Mr. Six-Pack? I don't want to see, Joe, I don't want to see it get below put that on your chart. Put this breaker on your chart. That breaker lines up with these, this breaker here takes out these lows. It also is the reverse back into this section here, and I don't want to see the mean threshold of that give way. So that breaker's consequent encroachment or mean threshold, I do not want to see that get taken on a close for that to continue going higher. Ideally, you want to see it just come back and give this a little kiss like it just did right there. and you want to see it leave, not this repeat coming down. Not a good sign when it keeps coming down. You want to see it, give it a kiss, take it to the prom, baby. Take it to the prom. You don't want to be sitting down here and a little grabby in the moonlight stuff going, look, we just asked her, we just gave her a kiss at the front doorstep, and look, grabby in the moonlight. We don't want this. We want to get in the car. Let's go. Wait a second. Is that cherry lip gloss you're wearing? So yeah, that's where I'm looking for that one. Joey Sixpack. It's gonna be my mob guy. This is Joey Sixpack. Okay, Joey, that's what you got. Can you check out Wolf? Woof. W. I like that. I like the name of the company. You're talking about the American version, I would imagine there, JC. Ooh. Let's do red trace. Perfect premium array right now. So I'm expecting this to come lower. Is this the one? Wolf has earnings today. I've been sitting in it for a few weeks. Are you looking to go long or short? Because you've traded back up into the premium array inside this range. You've hit the premium array. You've hit this imbalance. And you've hit the inside of the premium array. So let me just draw that out for you. Make sure you've got that drawn on your chart. There's a premium array, and it has to include, this is a daily, so daily inversion, and it's got to include that piece right there. So that's your return to imbalance. There's a little tiny imbalance in there, as well as this busy. It's an inversion. You've run right back into it. Now, premium array, my discount array I'd be looking for overall would be down here. And you don't want to see it get below yeah, it's literally going to bring you right back into that. If that's an up close candle, it's going to bring you all the way back into here. So you do not want to see the mean threshold of this candle. I'd like to see it just come down and give this a little kiss on top here. These equal highs. So we're going to come a little lower if we get below here. Through this, you're through this. This would be great to see this key off of here, even though it's in the premium area. Oh yeah, no, we've got a trade above here. Body, and that actually looks good. Here's in the, if we're talking in the premium area here, I can argue two different directions. For a positive, I'd like to see that get above this level, obviously, and start getting through this mean threshold of this candle here. Otherwise, this has to hold right there. If we just come down and give this a little institutional order flow, that would have been institutional order flow. We would have come out, just give that little kiss there, and then start running back up. Mean threshold right there. I don't want to see that go. So we could come all the way down and touch these old highs, leaving the rest of this open. And then you got the consequent encroachment after that. And then if you lose that, look for a run down into here. If you want this to be bullish, it has to stay off of here now. The fact that it's come back, rebalance that, gave you a little, that would be technically, if you look at Michael's institutional order flow entry drill, if this immediate rebalance is now treated like a fair value gap, and the next candle that comes back and just pops through here, find support, it's got to go, it's got to keep going higher here. We start getting nervous if you get through that. If we revisit this one more time in the next day, I don't want to see the half that wick go. If you want to go bullish, if it starts to give way and you start to take through here and there, look for the consequent encroachment next, and you're slowly giving up profits if you're long on that. You're in a premium. If I was in on this for a long off this reversal, your stop loss would have been sitting here, traded through it. Yeah, you didn't get back into it except here, and then it traded through on the downside, so I would have been out of it there. It would have had to have cleaned out this high or this high for me to get in on it. So I'd like to get in on that in a discount inside here to go higher again. It just feels like it might want to come back down lower. I hope if you're in it long that you get your long off of here. It continues to find support off this candle. If not, I get a feeling you might want to come, it's going to come back into here somewhere. It might do. That's all I got. Take that with a grain of salt, my friends, and some pepper. Maybe a hint of oregano. I don't know. Don't trade on my idea. Just, that's all I'm looking at inside that one. It's kind of I can argue two different directions there. I want to see it go higher if you're in it, but it has to stay above here for that. Somebody else said, did you say keep your eyes on the front? I probably did. Andrew, do you trade any prop firms, Top Step or at Apex? Yeah, both actually. Mark, Ford, please. Ford, please. Yes, sir. Ford it is. Ford is next. Ford. Ford. My dad used to work for Ford. Back in the day, body man. Eesh. My Lord, look at that. Oh, it's Ford Industries. We want Ford. Which one do you want for Ford? Motor Company. That's the one you want. F. Right? You're looking for Mark? Yeah. I was going to say that Ford looked terrible there. It was forward. So reversal. Here's your reverse. See that? Trade below. Pop back in. Beautiful. Wham! For a short. Take out the discount array. Trade below the discount array. Literally pop right through it. Now we get a reversal. You get an imbalance right here, all the way up to that imbalance, or the bottom of that wick. You trade back inside the consequent encroachment of that. You want to see it get above this level on a close. It did, and then traded below it. So then you're back into this range again. Discount, trades below that, then trades above it. So you want to see it break above this high here, because now you're in this consolidation. We have a candle closed on the high, not above the high, then gap down, took out the lows. We have a big gap sitting right here. For Ford, it's too consolidated for me. If this is the daily range and you're in the discount portion and you've just keyed off, you just hit the bottom of this first lowest down close candle. You've traded below this, extending the range. You've hit off here. It feels short to me. Feels like it wants to run for these lows, because we've got this high taken. See that? We have a reversal happening here. We've traded below the reversal. We've traded back into the reversal, and we've got short. Now you've got one here that wants to go long, and you got one here that wants to go short. So the one that wants to go long has now been traded below right there. Then it literally yesterday opened up, came into that level with perfect, and then went short. So you're short for the rest of this, so extending the range. So you're short from there to there. And I don't know if that's worth anything, but 1088 to 1062. That's only 28 cents. It's like 2% return in one day. And if it takes out that low, move your stop. As soon as it takes out that low, move your stop loss into break even, pay yourself at that low. And then if you take out this mean threshold of this candle, look for these equal lows and a return back into this fair value gap below you here, or this gap in price, volume imbalance and gap. Does that help you, Mark? So I'm bearish overall in that one right now. Anybody else got one? Derek's hungry. Yes, that's it. Junior gold miners, thank you. Wolf has earnings today. I've been sitting it for weeks. I'm long in it. Good. My entry was $3.90. Oh, $3.95. Good for you. Thanks. Okay, thanks. F, yes, I'm bearish as well. Good for you, Mark. Aiming for these lows. Again, remember, don't overshoot your PD arrays. I know this looks like a nice little draw on liquidity. You've hammered down in here before. So look for your next PD array, which has been hit. If this is your cluster right here, these two candles make your mitigation block, because we don't get a run above an old high, so it's a mitigation block. This mitigation here, we've come back and we've hit the top of it right here, and we've got a reaction off of it. And we've also hit the top of the very most sensitive candle, which is right here, and you've had a bit of a reaction off that. So you need to hit the next array is right here at 1032, then 1033, which is also the midpoint of that order block. And then the last line in the sand is 1028. If you lose 1028, look for the lows and then run into this guy here. That's what I got for Ford. Anybody else got one you want me to look at? Yes, I'm bearish as well. Good for you. All right. Oh, can you feel that vengeance? Can you feel it, people? Look, just 5 more little handles to go. Five little handles to go. I have to sit around here now and wait for the 5 handles just so I can go, hallelujah, finally hit my leg. Finally, the leg has been completed. The upside leg has been completed. Look at that. We called that this morning. And look at that. Right into it again. Clear out this. Watch for this candle to get taken to the upside. It does. Bink. Bink. And away we go. Reverse into this guy. Look at that. You don't even get the... Oh, yeah, you do. Bodies respect this. The wick would have taken me out there, but you're trading back in here. You've got to give yourself... When it's literally that close, you've got to give yourself the fair value gap as well. When you're looking at this, usually you hear me say put one handle below or one tick below this low. But if it's sitting inside the fair value gap, you have to give it the fair value gap as a retrace. If you've already ripped through it like that, you want a nice little discount. It'd be anywhere inside this box right here. So you'd have to put your one tick below that low. Come on. 2 more handles, 3 more handles. $27 people. If you're new to our channel, you're welcome. Subscribe to us. We're happy. We're here every day showing you how to read the market. And if you like what we did today, hit the like button. I appreciate that. Just lets me know that you like what we're doing. And it's more for Derek than me, because Derek enjoys a nice thumbs up on the old channel. So it's more for Derek. he's very emotional if he doesn't get his thumbs up. So I'm going to stick around here for a couple more minutes. I just want to see if that hits my 71. Oh, it wasn't 3 handles. It was 13 more handles to go. Oh, maybe I won't stick around. All right, so that's where I'm still looking for that last little piece of the pie. And so I'm going to be heading out. I'm going to spend some time with my girl. Thank you all for tuning in. Thank you very much for your time. I appreciate it. I know there's lots of people out there for you guys to watch. I appreciate you taking your time with me today, and I will see you probably tomorrow. Thanks again for tuning in. It is much appreciated. Thank you.